Thanks, guys. It's great to be back. Are you crazy over crypto? And what's all this buzz about Bitcoin? Question. If you invested $1 in Bitcoin on the day it started trading in 2009, how much would that be worth today? A. 7.3 million, B. 23.5 million, C. 43.5 million, or D. 73.5 million? Well, the answer is going to blow you away. The first trade in Bitcoin was on October 5th, 2009. If you invested $1 that day, it would be worth about $73.5 million today. Before I get started, a word of warning. For those of you that can't see this slide, the information that I'm going to talk about is for information purposes only. Please don't take what I'm going to say as investment, financial, legal, or tax advice. There are risks associated with investing. You can lose money. You need to talk with your personal financial advisor to determine whether or not investing in digital currencies such as Bitcoin is suitable for you. Again, this information is for information purposes only. Welcome to the Magic Moment, April 2021. That's how best-selling author Malcolm Gladwell describes the point at which an idea or trend goes from the fringes to mainstream. Gladwell wrote about the magic moment in his book Tipping Point. The tipping point is that magic moment when an idea or trend, social behavior crosses a threshold, tips, and spreads like wildfire. Cryptocurrency is approaching that point right now. April 2021 will go down in history as the moment that crypto went mainstream. What would life be like if our currency wasn't controlled by governments or corporate agencies? What if there weren't any limits on the amount you could transfer to another person? What if there was no interference from government authorities when those limits were exceeded? And perhaps best of all, what if there was no physical cash? It all sounds pretty futuristic, doesn't it? Thanks to a few industrious computer geeks, the monetary future has arrived. Bitcoin is a virtual currency that was created and designed to give its users complete financial autonomy. There's no censorship. It's protected from inflation. It's cheaper than other payment systems. Just you and your coins. How you choose them is up to you. Crypto lets people manage their finances the way they want to without Big Brother looking over their shoulder. Know this, Bitcoin is a difficult subject to grasp. I want to give you a better idea about what Bitcoin is, how it works, and why the technology behind it is the basis of the currency of the future. Understanding Bitcoin requires that we understand the limits of our ability to imagine the future that the market can create for us. If somebody told you 30 years ago that we would just about eliminate first-class mail with electronic flying text through the air and landing in a personalized inbox that you could check at any time, day or night, you would have told that person that they were nuts. What they were talking about was impossible. Hey, George Jetson didn't even have email. Elroy brought notes home from school on pieces of paper. But email is here to stay, and it has largely replaced first-class mail, just as texting, social networking, private messaging are replacing the traditional telephone. The reason that it's hard to imagine the future is because entrepreneurs keep surprising us with stuff we didn't know we needed. The markets are always outsmarting the most wild-eyed dreamers and the naysayers who keep saying that such and such can't happen. At some point, digital money will replace government-issued paper money. For centuries, gold and silver were the money of choice. It was controlled by its owners and its users. Then the politicians got hold of it, a controlling interest in half of every transaction, and look what they did. Today, money is rooted in nothing at all. It's subject to the whims of central planners, politicians, and monetary bureaucrats. The system is not very modern, and it is very broken. When you look at the world we live in today, maybe it was just a matter of time. It's impossible to deny but digital money is practical. Gamers need tokens that they can trade. Digital real estate needs to be bought and sold. Money is becoming more notional, with wire transfers, bank computer systems, card networks that move money around. The whole world is migrating to the digital cloud, but conventional money is stuck in the past. It's stored in vaults owned and controlled by governments. The geeks went to work trying to create a digital currency in the 1990s and came up with a number of prototypes, but they had two major problems. First, they couldn't limit the supply. Limited supply is what gives money its value. Second, nobody could figure out how to make it impossible to double and triple spend each unit of currency. On October 31st, 2008, an anonymous developer going by the name Satoshi Nakamoto released a white paper titled Bitcoin, a peer-to-peer electronic cash system. Who is he and where did he come from? Nobody knows. There are lots of rumors as to who he or they might be. Here's what we do know. He may or may not be Japanese. His writing style suggests a British or Australian education. He's smart. He's a coder. Bitcoin is written in C++ code. He understands high-level encryption, and he's intimately familiar with different types of computer network. And then we have the mystery. What's a good story without a good mystery? He totally disappeared in 2011, and I mean totally disappeared. His original cache of 1 million bitcoins, which is known as the Genesis block, has never been touched. That's over $5 trillion at today's price, which is a lot of money in anybody's book. Is he dead? Don't know. Is he in prison? Don't know. Is he in hiding? Nobody knows. We don't know, and we won't know until he unlocks the Genesis block, if he ever does. You know, there's another reason why he might have done it, and maybe it was to simply prove that it could be done. Satoshi's philosophical and practical motivations for creating Bitcoin most likely were 1. A distaste for government control, 2. A distrust of the banking system, and 3. A desire for a new way to make transactions digitally. Mystery aside, the system he built is simply incredible. It's designed to replicate the experience of the gold standards. The early creators had it easy, just like the early gold miners. They could pan it right out of the river. But today, gold is hard to get. You have to move mountains of earth to get the same amount of gold. Nakamoto built a system of mining that gets more difficult over time. He understood free market economics because he put a limit on the number of coins that could ever be mined. The supply is fixed at 21 million forever. He made his code completely open sourced and available to everybody so that it could be trusted. The payment system uses the most advanced form of encryption with public keys visible to everybody and a scrambling system that makes its connection to the private key impossible to discover. No one person will ever be in charge of the system, but everyone is in charge of the system. This is what it means to be open sourced, and it's the same dynamic that has made WordPress a powerhouse in the software community. There would be no need for an audit Bitcoin movement like Ron Paul's audit Fed movement today. This no one person in charge is driving the political class crazy. In addition, trust, anonymity, speed, strict property rights, and the possibility that other applications could be built on top of the original infrastructure made it just about perfect. In Satoshi's system, every coin has an owner, and this system cannot be gamed. So what gives Bitcoin its value? Well, there's several things. First, it's not fixed or pegged to any existing currency. Second, it's driven by supply and demand. Third, it's made from real stuff, the very ones and zeros that drive the global economy. And while ones and zeros can be reproduced into infinity, the new coins can't be, thanks to a system in which The coin and its public key are strictly controlled, and the ledger is updated for every transaction. Its soundness can be checked constantly through instantaneous conversion to other currencies as well as to goods and services. Last and most important, the supply is fixed at 21 million coins. There can never be any more than that, ever. Like I said earlier, April 2021 is a watershed moment in our financial history. This is a day that crypto officially went from a fringe idea to mainstream adoption. Coinbase, the leading cryptocurrency exchange in the U.S., had its initial public offering. An IPO is when a company lists its shares on a public stock exchange for the first time. Coinbase is listed on NASDAQ under the symbol COIN, C-O-I-N. Okay, so why is the Coinbase IPO such a historical milestone? Because it's going to bring the next wave of investors into crypto, and this will send crypto prices even higher. Coinbase is a big company. The company reported $1.8 billion in revenue for the first 3 months of this year. That's a 38% jump over the $1.3 billion it reported for all of 2020. Coinbase has more than 56 million verified users, which is almost twice the number of accounts that online broker Charles Schwab has. And Coinbase is in a hyper-growth mode. The number of accounts has shot up 30% over the last 3 months. If it keeps up that pace, it will hit 100 million customers by October. The crypto market is big and getting bigger. Right now it's about $2 trillion in size and growing, which is small compared to the global gold market, which is $11 trillion in size, and the global stock market, which is $97 trillion in size. But $2 trillion is still a lot of money. Apple Computer is worth $2 trillion. It's roughly 4 times the value of America's largest bank, JP Morgan Chase. Coinbase is actually more valuable than Goldman Sachs. And this doesn't sit well with Wall Street. Goldman Sachs was founded in 1869, and it considers itself an elite institution. Coinbase was founded in 2012, doing business in a market that the financial elites have trash-talked for years, and now it's bigger than Goldman Sachs in value. Crypto is growing, and here's the kicker. Wall Street isn't yet in on the game. Goldman and the other investment banks see billions in fee-based revenues that Coinbase is generating. They also see the triple-digit annual growth rates that crypto has had over the past decade. But don't fear. Wall Street's greed for fees are going to get them into this game in no time flat. The reason, fees are the lifeblood on Wall Street. It's the gravy train. Wall Street rakes in about $439 billion each year from fees from fund management fees alone. Over the last decade, Wall Street profits from managed funds and security products has fallen about 25%. The gravy train is drying up and they need a new revenue source, and they need it fast. Crypto is their lifeline, and Wall Street wants a big slice of this pie. Let's take PayPal. PayPal started offering Bitcoin trading on its platform last October. A round trip will cost you about 6%. That's a spread between the buy and the sell price, and this is an insanely high fee. Most stockbrokers have fees that are close to zero. A firm charging 6% round trip on stock commissions would face both a customer rebellion, and the regulators would be crawling all over them. Companies can charge this today because it's a new asset class, and it's so profitable that investors don't mind paying the fee because they want in on the action. This is why Wall Street wants a slice of the crypto pie. It's also why the government won't be able to ban Bitcoin. Bitcoin and other cryptos are being woven into the fabric of the U.S. financial system. Tesla, Amazon, PayPal, and a host of other publicly traded companies have plugged parts of their balance sheets into Bitcoin. Fidelity, the big investment firm, will actually now let you borrow against your Bitcoin holdings. This is revolutionary. There's too much money at stake today for the government to try to shut it all down. And let's not underestimate Wall Street's power over Washington. There are people in Washington who want to outright ban or regulate Bitcoin and other cryptocurrencies. They don't understand that crypto isn't the problem. Washington is the problem. I expect the Wall Street crowd to have a chat with leaders from both parties. Also, new crypto industry pressure groups are also forming. Just last week, there was news that a group of companies that include Fidelity, Coinbase, and payment processor Square have formed an alliance to lobby lawmakers. It's called the Crypto Council for Innovation. According to its mission statement, it aims to show the transformational promise of crypto and communicate its benefits to policymakers, regulators, and people around the globe. Are you too late to the party? Right now, about 35 to 50 million Americans own crypto. That's 10 to 15% of the U.S. population, and that's just a guess. The U.S. banking system touches the lives of more than 300 million Americans, and it holds north of 20 trillion in assets. And that's just a fraction of the 290 trillion global financial market. As more people, businesses, and institutions warm up to crypto, we're going to see billions, maybe even trillions of dollars flow into crypto assets. Crypto is becoming part of the mainstream financial sector right before our eyes. Coinbase has opened the floodgates by going public. Crypto is now on the radar of millions of investors, and you can expect other crypto exchanges and crypto-related businesses to go public shortly and enter the mainstream. So, is crypto for you? Only you know the answer to that. It's a risk-reward kind of investment. On a scale of 1 to 10, right now it's a 9 or a 10 because of the risk. This is common sense. If you want to invest right now, you should only invest what you can afford to lose. Is it going to be volatile? That's an understatement. The price is going to be all over the place, and you need to have a stomach for all of the ups and downs. You need to do your homework, your due diligence, your research, and make the proper choices in light of your own financial circumstances. In my mind, this is a once-in-a-lifetime opportunity. Crypto is here to stay. I believe this so much that starting tomorrow, I'm going to have a portal through Coinbase that will allow TW3 members to pay for their memberships and other services with cryptocurrencies like Bitcoin and Ether. So if you want to know more about crypto, just go to my website, crazyaboutcrypto.net. That's crazyaboutcrypto.net. Oh, and don't forget to tune into my radio show, Coach C's Inside Pitch. It airs every Tuesday night at 7 p.m. Eastern on tw3radio.com. That's about it. Back to you, Terry.